You probably think of firms like Tesla or Rivian Automotive when you hear about electric vehicles, EVs. For the environmental movement, the introduction of EVs represented a significant turning point. However, as interest in these new cars grows, one worry seems to persist. Although EVs are an intriguing alternative to conventional cars, switching to all electric mode has significant disadvantages related to the batteries in these vehicles. Depending on where you live, a big issue among potential purchasers of EVs is range, which is closely followed by a shortage of charging facilities. QuantumScape is one business that seems to be making progress in the battery industry. Examining what makes QuantumScape unique from its rivals, let's determine if this is a good time to buy shares in this emerging technology company. How does one use QuantumScape? For EVs, QuantumScape is creating a novel kind of battery. More precisely, it is thought that the company's solid state lithium metal battery could be an improvement over conventional lithium ion battery technology. The goals of QuantumScape's solid state batteries are to shorten charge times and boost cell energy density. Therefore, solid state batteries may be able to increase an electric vehicle's range. Several automakers, notably Volkswagen, an investor in the business, have expressed interest in this dynamic. Someone might be wondering, how is business doing? The fact that QuantumScape is still in its early stages of development is among the most crucial aspects prospective investors should be aware of. The company's cash position is being negatively impacted by mounting expenses, as QuantumScape has not yet produced any income. Although the corporation thinks it has enough cash on hand to last until 2026, I foresee a lot of difficulties. Exorbitant expenditures for research and development are frequently linked to startups. Furthermore, QuantumScape will still need to be able to meet large-scale production demands even if its battery technology becomes widely used. Scaling EV firms is a time-consuming and expensive endeavor, as investors have witnessed with Tesla and Rivian. Can the stock of QuantumScape increase? There have recently been obstacles to the widespread use of electric automobiles. Early adopters of EVs purchased their automobiles, and there isn't a quick motivator for people to give up their gas-powered vehicles. Major EV manufacturers like Tesla and BYD have suffered a decline in their stock prices, and many conventional automakers have temporarily retreated from the EV market. Solid-state battery maker QuantumScape, one of the manufacturers of EV parts, has faced difficulties in kind. The last year has seen a 9.6% decline in Kias, because investors believed that QuantumScape's solid-state batteries will eventually replace the lithium-ion batteries that currently power EVs. The company was a popular investment during the meme stock era. Following the 2020 SPAC deal that brought the firm public, Fiusk surged to around $115 per share. The company has battled with production delays and has not been able to turn a profit, thus the hype was short-lived. Since then, QS has been declining, and it is now trading close to $6 a share. Even though it might seem implausible, QuantumScape has a solid product, solid alliances, and a large cash runway. These factors make it doubtful that the company's shares will ever hit their highs from a few years ago. Furthermore, QuantumScape just declared that it will begin moving its batteries on a bigger scale. Why did the stock of QuantumScape drop? Not only does QuantumScape not generate any income, but it is also losing money, which is the primary problem. Given that it achieved a noteworthy milestone in the first quarter of 2024, management thinks things will alter. It began shipping its Alpha 2 battery prototypes. The company's latest solid-state battery, the Alpha 2, is supposed to fast charge from 10% to 80% in 15 minutes. In addition, the batteries outperform lithium-ion alternatives in low-temperature conditions and give longer mileage. This is the first of the company's 4 primary objectives for this year. The remaining ones are to produce more TSE5, QuantumScape's first commercial product, accelerate the Raptor fast separator production process, and create the Copra process, which will enable higher Kia E5 production volumes. During Q1, QuantumScape incurred capital expenditures of $14.1 million and incurred a net loss of $131.9 million. With $1.01 billion in cash and cash equivalents on hand at the end of the quarter, QuantumScape anticipates that it will be able to fund operations through the end of 2026. For the entire year of 2024, QuantumScape has reiterated its projection, estimating capital expenditures of between $70 million and $120 million and adjusted EBITDA losses of between $250 million and $300 million. Investors who had anticipated that the company would be further advanced in production were not pleased with the earnings call, and as a result, the price of Kia shares fell by almost 7%. Can the stock of QuantumScape increase? Analysts are not very optimistic about QuantumScape's stock recovering. A consensus price target of $6.13, or just 3.7% over current levels, is set. There are 3 sell recommendations on the stock, and the lowest projection is for QS to fall by almost 32% to $4 during the next 12 months. Just one analyst out of 10 who has graded the stock suggested buying it. The analyst projects that QS will increase by more than 69% to $10 in the upcoming year, which makes the highest projection quite optimistic. The fact that longtime ally Volkswagen continues to support the company is one advantage that stockholders can grasp onto. The automotive behemoth invested $100 million in QuantumScape in 2018 and then another $200 million in 2020. The batteries from QuantumScape passed all of the endurance tests conducted in January by Volkswagen's PowerCo battery facilities. The batteries retained approximately 95% of their capacity after more than 1,000 charging cycles. This implies that an electric vehicle might go more than 310,000 miles before seeing noticeable battery degradation. Frank Blom, CEO of PowerCo, stated, "These are very encouraging results that impressively underpin the potential of the solid-state cell. The ultimate outcome of this research might be a battery cell with great range capabilities, ultra-fast charging times, and near-ageless performance. We continue to move forward with our partner QuantumScape at full speed in order to bring the solid-state cell into serial production because we are confident in it." Is the stock of QuantumScape undervalued? One-third of the main tenet of QuantumScape bulls, that solid-state batteries would power EVs in the future, is supported by the Volkswagen results. The company's early entry into the market will make QuantumScape a key participant in the EV environment, according to the second section of the thesis. That is not a given, as the world's largest automaker Toyota has long indicated it has a solid-state alternative. Solid-state battery development is also being pursued by EV giants BYD and NIO, among others. These businesses all have more reach than QuantumScape. Investors in QuantumScape were under the last impression that EV adoption will quicken and eventually overtake other car models as the primary means of transportation. Although most consumers still find electric vehicles to have too many limitations, early adopters of EVs have come around. To be more specific, they don't drive far enough yet, are too expensive, and charge too slowly. Should I buy QuantumScape or sell it? Since the business's inception a few years ago, QuantumScape has been the focus of much conjecture. However, as the company has struggled to get its goods to market, the majority of investors have pulled out. Though QuantumScape's declining profits and lack of income are worrisome, the company ought to have enough money to last until its batteries are installed in cars. Whether the business can take use of its first-mover advantage to seize market share before rivals enter the picture is a bigger worry. Concerns regarding the EV market's future are also growing. If the market for electric vehicles continues to expand and QuantumScape continues on its current trajectory, the company may be well positioned to make a big impact. Sadly, there is a large if there. is it wise to purchase QuantumScape stock? At the time of writing, QuantumScape had a $3.4 billion market capitalization. Even if it can be challenging to assign a pre-revenue company a fair valuation, QuantumScape seems a little unrealistic. Before going on sale, the company's batteries still need to prove a lot, even if they recently passed a significant milestone test with Volkswagen. Moreover, QuantumScape is by no means the only business investigating solid-state batteries. Numerous automakers in Asia and Europe are also examining the technology for their own electric vehicle initiatives. Although QuantumScape is an intriguing firm, I'm not sure how investable it is at this time. Considering the company's high burn rate, lack of concrete sales, and fierce competition, investing at a multi-billion-dollar valuation is difficult to justify. QuantumScape may be of interest to investors who are interested in the electric vehicle movement and its varied uses. Nevertheless, until the company has a clear long-term way forward, I would advise against purchasing shares. For the time being, it might be advisable to treat QuantumScape stock and the solid-state battery industry with some speculation. Is it currently a good time to invest $1,000 in QuantumScape? Think about this before purchasing QuantumScape stock. QuantumScape did not make the list of the top 10 stocks that the Motley Fool Stock Advisor analysis team recently determined are the best ones for investors to purchase right now. In the upcoming years, the 10 equities that made the cut might yield enormous profits. Stock Advisor gives investors a clear roadmap for success that includes monthly stock recommendations, regular analyst updates, and advice on constructing a portfolio. Since 2002, the S&P 500 return has more than tripled thanks to the Stock Advisor service.